Welcome. This is Will Allen with Sentara Capital, back with another update on the coronavirus and its impact on the financial markets. Today we've seen stocks have very nice gains on the hopes that Congress is going to pass a $2 trillion stimulus plan, one that is aimed to do a number of things, including get money to workers who have not been able to work over the last few weeks, as well as get money to industries that have been particularly hard hit, like the airlines, hotels, and restaurants. It's important to note that the term bailout really doesn't apply in our opinion here, because that implies that some of these businesses did something wrong, and that really is not the case. Many of these businesses have been doing very well and had great balance sheets just a few months ago, but now, because of the sudden economic stop, they literally have no revenue, and very few businesses can go 4, 6, 8 weeks in that condition and still be okay. The other key thing in this bill is going to be getting money to small businesses, because those are definitely going to be hurt significantly by this sudden stop. And it's very critical that we can help out those businesses before they dissolve, because putting them back together is very challenging, history says. Now, one other point we want to make is even before the gains today, markets had continued to decline, but the volatility had come down. We've talked about the VIX in recent posts and videos and how it had spiked up last Monday to all-time high levels. It has been declining in the last week, even as the stock market has continued to sell off. That historically is a very good sign. It lets you know at least a lot of the panic selling is over with. We hope that's the case this time. If volatility continues to decline from last Monday's peak, what you may expect to see are the market having periods where for 2 or 3 days it has some nice gains, but then remain choppy. So you can still have mixed in some down days for the markets, but hopefully the days of down 10, 12, 13% are behind us. One thing that's going to be important is we're going to get a lot of very negative economic data in the next few weeks. Again, we've talked about before the sudden stop that has happened here. Really, there is no case study for this occurring in the past. And a lot of very sharp Wall Street analysts are expecting now that second quarter GDP in the U.S. is going to decline anywhere from 10 to 20% in one quarter. That is a huge shock, especially considering just 1 week ago, most of them expected a 1 to 3% decline. So those numbers are going to be very shocking. The other thing that we're going to see is unemployment claims. In other words, people who've been laid off and are now looking for benefits. Expectations are this Thursday, when they announce claims for last week, we may see anywhere as high as 3 million people who lost their jobs. To give you an idea, prior to this coronavirus crisis, unemployment claims were around 200,000. And in the financial crisis, the highest they were in any 1 week was a little over 600,000. So 3 million, that's going to be a shocking number. We'll see how the market responds to that. As for our investment strategy, quality is still the name of the game, both in stocks and in bonds. And the reason for that is there still is too much uncertainty, both here and abroad, regarding the coronavirus. Just today we had India and the UK both implement 3-week shutdowns, complete shutdowns in their society. That causes major economic damage, though it is necessary for right now. What we do want to see, though, is new cases peak here in the U.S. We're still probably a couple weeks away from that, but when that happens, that's going to be a major deal. People will start to see the light at the end of the tunnel, we think, when new cases start declining. Also, we want to see the market decline a little less on negative headlines. We'll see this week when we get that unemployment number what the market does, but eventually you'll have some fatigue there with markets since they are down so much on negative news. That typically is a good indicator that you can start to look to do more buying, though selectively. And then the last thing I'll mention is leaders are going to have to make a determination soon, and we've heard them talking about this recently, of how do we eventually pivot and get the workforce back to work. We can't go months and months here in the U.S. with complete shutdowns. It would just be too much damage for our economy. But you've had President Trump Governor Cuomo in New York and Newsom in California recently talking about it is going to be critical to make that pivot and to start thinking about what that will look like. We'll be here in the meantime watching over your accounts. Thank you for trusting us, and we'll be back soon.